Welcome. I am the FX Savant. We have another episode of Confessions of a Trader, Season 2, Episode 3. In this episode, I want to touch on some things that your mentor may do that are real red flags. If that sounds good to you, go ahead and drop me an early thumbs up. It does help out the channel as well. I'm trying to reach 1,000 subscribers so I can get a free haircut per my barber. But let's get right into it. Okay, number one, a watch list prep. If the person you're following does not prepare the watch list before they actually trade. Now me, it's session, a whole session before I actually get up and trade. So the day before, I prep my watch list. Now, if the person you're following or learning from does not prep the watch list in advance, they just come straight to the market and start to trade, that's a real red flag. They're not seeing the big picture. They're only focusing in on what's happening in the right now. And if you know, you can use your historical data as well as things that have occurred over and over and over again in the market to help you trade in the future. So you can use stuff from the past to help you trade in the future. Coming straight to the market without any knowledge of what's been happening or what happened prior before you were there, even an hour before you were at the market, can be real detrimental to your account. Something could happen. You could see something that looks good from a short-term view, so an entry time frame perspective, so 4 hour and below, you could be on the 15-minute and see a nice buy opportunity. But if you zoom out on the daily and weekly, you might see that you are in a really big downtrend, which would not be conducive to your trade playing out in overall success. So one, make sure that they do prep their watch list beforehand. So it's something that they can say, hey, I'm looking at this to happen in the market on this certain pair. If it does happen, I'll take the trade. If it doesn't, I won't. They come to the market and they're just saying, hey, look at this opportunity right here. This looks like a good one right now. That's a real red flag. Point number two, they need to record all their trades. Now this is for not only them, but for you as well. They should be able to go back in their trading history, understand exactly the reasoning behind they took a trade, why their stops was where it was, why their take profit was where it was, why their entry was where it was, why they closed profits where they did. They should be able to tell you everything about the trade going back and looking at it. And they should not have so many trades that they can't remember what trade they took last week. So if you go through my trading history, everything is in the signals. All the trades that I take, I send out over there. So everything from the beginning of this year, once I started sending out my trades, making it public, you can see every single one has the entry, stop, target, the reasoning as to why we're getting in or as to why I'm getting in and why I took profit or exited the trade where I did. Now this is for my own personal trading as well as for the people in the group chat. So what it does for me is help me to reiterate some of the things that I know, keeping me consistent by saying, hey, this is the same setup I'm taking over and over and over and over again. Here are the results. You can see here's winner, loser, winner. You can see all of the history, all the historical data of all the trades that I've taken to analyze my strategy. So for the consumer, the others in the group chat, they can understand that this is how trading is supposed to be. You're taking the same setups, same consistent setups, using the same strategy, applying the same rules over and over and over and over and over again. Because we know the best way to learn anything is through repetition. The more you do something, the better you get at it. Doesn't matter what it is, even if it's being bad. The more you're bad, the better you're going to get at being bad. So if they do not have their history of all the trades that they've taken, that is a red flag. If they do not prepare their watch list beforehand and just come to the market and trade, that is a red flag. Number three, and probably the most important red flag, is if they do not use a hard stop every single trade. If they do not place a stop when they enter into the market on their MetaTrader app, then that is a huge red flag. Yes, some people say I have a mental stop loss. That's not professional trading. Anything can happen in this market. I know you've probably been aware of that crazy things happen all the time. Anything can happen in this market. So why not protect yourself and not let any natural disaster affect your account? You could be away from the market. You could be away from your phone. So what I do is I go on TradingView, do my analysis on TradingView, and then I go on my phone, my broker, and I go through my MetaTrader 4 app to place my trades. So that's the only time I get on MetaTrader 4 app. I don't use it to analyze the market. I don't do anything on MetaTrader 4 other than plug in my lot size, my stop, and my take profit. So if they do not use a stop loss, anything can happen. You could be out at a party. You could be out at a party and your phone breaks, and now you're in the middle of a trade with no stop loss, and it's probably going to go against you. You're probably going to blow your account. Not probably. You will blow your account. So anything can happen. You could drop your phone. It could die. It could get lost. You could be in a place where there's no service, no Wi-Fi. That could affect your trading. If you don't have a stop loss in the market, then you're essentially saying you're willing to lose all the money you have in your account right now. You could say, I have a mental stop loss. Well, what's the point in having a mental stop loss if you're going to get out in an area and not putting a hard stop loss in the market? You might as well put a hard stop loss there, because your mental stop loss is going to move. It's nature, human nature. Oh, the market could go to where I would put a hard stop loss. So say, for instance, you're selling, you have your stop up here. You say you have a mental stop loss. Price comes to this area. You're going to say, well, I'm going to give it 1 or 2, 3 more pips for it to come back and maybe break even, and I'll get out at break even. What's going to happen? 3, 4 more pips is going to go above your mental stop loss, and you're going to say, all right, I'm going to give it 5 pips to come back to where my mental stop loss would be, and I'll get out for that loss. Now, what happens is the market does come back to where your mental stop loss would be, but you think it's going to come back to break even and you're going to be able to get out with no loss. That doesn't happen. It comes to where your mental stop loss would be, actually giving you the opportunity to exit where you need to exit, where your mental stop loss says that you need to exit. But then you're going to hold it open in hopes that it's going to come back and profit, and then it's going to go even more negative than what it was before. And now you're going to be in a whole whirlwind of, oh, I know I should have closed. Can I hedge this position? Should I open another sale at a higher price point, add on to my losers, which we know you shouldn't do that. But just not having a hard stop loss in the market can cause a bunch of problems in your trading. And if you're learning from someone who does not put a stop loss on every single trade, then they are not a professional trader. Stop loss needs to go there. Stop loss is to tell you when you are wrong, because the human emotion is hard to tell itself that you are wrong and you need to stop. You're going to keep going. So if you're going to have a mental stop loss, the worst thing you could do is say, I'll get out of the market if I'm down this amount of money. So there's 2 things behind that. First, you don't know how much you're risking. You don't know your proper risk. And second, you don't have a hard stop loss, which means that your strategy is not intact, that you don't understand why you're getting into the trade. Those 2 points, and those are big 2 points. You don't understand your strategy. And then on top of that, you don't know how much you're risking. You don't know how to properly place your trades to where you know exactly how much you're risking. So there's no reason not to have a hard stop loss in the market. If you're learning from someone who does not use a hard stop loss, then please, 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 on every single trade. And when I say every trade, I mean every single trade. I can't get into a position if I don't know where my stop's going to be. That's the first thing I look at. Where does my stop have to go? Okay, where can I put my TP? Okay, then where must I put my entry in order to get a favorable risk to reward? I don't go straight to let me get in the market right now. Price may go to this area for a take profit. I can't put my stop loss here. No, stop loss goes first. My stop has to go here. All right, my take profit, it has to go here. Now, what can change is my entry. My entry can move depending on the amount of risk to reward I want. So if I want a higher risk to reward, I can make my entry tighter to my stop loss. If I want a lower risk to reward, I can make my entry closer to my take profit. But what I can't do is move my stop loss or my take profit. Those 2 are hard set. So every single trade I have, those 2 come first before I even get into the trade. Please use a stop loss on every single trade. Even if it stops you out by a pip and goes in your intended direction and goes on to take profit, that will be more beneficial to your account than it would if you traded with no stop loss and that position went on to hit take profit, because it's going to build false confidence for you saying that you can trade without a stop loss, and that's not a good thing. So just to sum it up real quick, so the points are 3 possible red flags that you need to look out for when searching for a mentor or someone to learn how to trade the market from. Is 1, they need to prepare their watch list, all the pairs that they're going to trade beforehand. So they need to have a plan going into the market, which just tells you that they have a proper trading plan / strategy. Second, they need to record every single trade that they take. If they do not record every single trade that they take, they're not serious about their trading and they're not professional traders. You need to record every single trade that you take. It's beneficial for you, and not only for the person who's taking the trades, it's beneficial for anyone you want to teach. Anyone that learns from you, they can go back and help you reiterate the same things that you need to tell yourself. So I tell myself the same things that I tell you in these videos every single day. I use these videos to help me reiterate that fact into my brain. So they need to prepare their watch list. They need to record every single trade every single time. If they don't, then they're not serious and you shouldn't take them serious. And lastly, but not least, probably the most important, is that they need to use a stop loss, a hard stop loss in the market on every single trade. If you ever see them take a trade without a stop loss, I would not advise you to learn from them, because those are bad habits and they're only going to be detrimental to your account. It's not going to help your account in any way. It's only going to hurt. I see a lot of traders out here trying to teach people how to trade, but only setting their accounts up for failure. By not incorporating these three things, it's only going to be detrimental to your trading. And if you do use them, it's only going to help your trading. So if you prepare your watch list, if you record all your trades and you put a stop loss on every single trade you do, I promise you will get better. It will not hurt your account to do these things. It will only help. If you don't do one of these things, it can be very, very bad for your account. But with that said, I would like to invite you to join the FX Savant University program. It is now available. We are up and running. In my program, I teach you all the details and intricacies of all the strategies that I use. I also do a daily Q&A every single day, answering all the questions that you submit. Also, you can trade with me every single day. I send out a watch list update, updating you with the correct pairs that match all the strategies perfectly with the highest probabilities of success, giving you the correct stop, entry, and target placement. I'd be happy to have you. That's it for the video, man. Make sure that your mentor possesses these three things. I hope you have a profitable day on and off the charts. And until next time, I holla.